Hey rich girls, Kirby here, and today we are continuing our tax discussions by calculating our effective tax rate step by step. While your top tax rate, otherwise known as the marginal tax rate, is typically what gets discussed the most, your effective tax rate is a much better indicator of how much you are actually paying in taxes. This is Rich Girl's Guide, where we demystify the world of personal finance to help you create a financially successful and fulfilling life. I'm your host, Kirby Delicano, and I worked in wealth management for over 6 years before leaving the office to focus on my business and my family. Like I said earlier, your marginal tax rate, the highest percentage you are paying in taxes, is typically what people like to discuss. Let's say, for example, you are single and you make $80,000 a year. That would place you in the 22% tax bracket in 2024. But just because your top dollar is getting taxed at 22% does not mean your entire $80,000 of income is getting taxed at that rate. You see, there are tiers to the federal income tax bracket. For 2024, you are taxed 10% on your first $11,600 of income. You're taxed 12% on the next $35,550. And finally, you're taxed 22% on the next $32,850, which brings your total taxable income to $80,000. Now, before we start doing any calculations, we do want to deduct a certain amount of income from that top tier, the standard deduction. The standard deduction is something that came about in the 1940s, and it was originally introduced as a way to simplify taxes. Instead of itemizing your deductions and keeping receipts throughout the year, Congress introduced a flat percentage that could be deducted from your total income. That has since evolved to become a flat dollar amount, and if you have enough deductions throughout the year that amounts to more than the standard deduction, you can opt to itemize instead. Itemized deductions have long benefited those in the higher class and those with higher income. Unless you paid a lot in real estate interest and or property taxes, meaning you actually had to own real estate or property, or you've chosen to give a lot to charitable organizations, which again has long been a way for the wealthy to decrease their effective tax rate, you are most likely going to benefit the most from taking the standard deduction. According to the IRS, 87.3% of Americans chose to take the standard deduction in 2020. So, how does it work? If you are single and you opt for the standard deduction, you will get to deduct $14,600 from your taxable income. So if you make $80,000 a year, that means you get to subtract $14,600 from $80,000, leaving you paying taxes on $65,400. This also means you are only paying 22%, your top tax bracket, on $18,250 of your income, since you get to deduct that $14,600 off the top of your income. So let's do some quick math. 10% of $11,600 is $1,160. 12% of $35,550 is $4,266. And 22% of $18,250 is $4,015, meaning you are paying $9,441 in total federal income tax. Divide this figure, 9,441 by your total income, 80,000, and you will get 0.118. Move that decimal place over 2 places and your effective tax rate is 11.8%. That's a hell of a lot better than 22%. Of course, taxes aren't quite this simple across the board. You may need to add in other taxable dividend and interest income from your portfolios. You may get a child tax credit, and there are countless other small things that will change your overall taxes. Having said that, knowing your effective tax rate or having a ballpark idea of what it is a crucial piece of the puzzle in your overall financial picture. This comes into play when choosing how much to withhold from your paycheck instead of just relying on your employer to withhold the correct amount of taxes, figuring out whether or not you should withhold taxes from distributions within your retirement and investment accounts, and even when determining whether or not you should make a charitable contribution in December or January. Thank you so much for tuning in today. I hope you're enjoying my mini episodes leading up to tax time. And please let me know in the comments if you have had any small wins. Please feel free to send this episode to someone who needs a kick in the pants. See you next Monday for another full-length episode. Later, Itch Girls.